Good afternoon, everyone. It's 5:02 p.m. on Wednesday, March 22nd. First of all, let me say Happy New Year to our Persian friends. It's year 2582 in the imperial calendar. That was on Monday around, remember, they wait for the solar objects, Earth and Sun line up. So it's a true spring equinox, and it was about it was 5:30 our time. Yeah, on Eastern Front, yeah. On the Western Front was 2:30, better known as Terangeles. Okay, very quickly on the housekeeping items. Nothing to report other than 9.1 is 4.91 on the day trading system is really our flagship now. We'll have to do this over the weekend, 4.91, and roll up and show you what this has done. It's about the same setup, a little bit more robust, a little bit less on the drawdown side, but mainly it was internal. It wasn't really any parameters. We do have to adjust that occasionally for volatility of the forward volatility of market that we look at, because any testing is usually looking in the back. That's no good. You really have to think about future, not the past. Past is already written. It's history. It's like a chart. It's already done. You got to think forward. So, and then on 5.0, we're lying a little bit behind, not because of the project. Actually, our project is on hold because our chief programmer there also is involved with part of TradeStation called App Store, and with some investors from Israel, actually. And they're running behind in some programming issues, and I don't want to change the guy. He's too smart. He's too good. So he's asking for a week to 10 days of a reprieve. I granted him. I said, no problem. Last thing I want to do is put a gun to the head of a programmer. That never works. Rushing them has never worked for me. I've managed a lot of programmers over my life, years in the private sector. So instead of having it last weekend, which I thought was maybe my New Year's gift, it's going to be toward the end of the month. I mean, more like April's Fool Day. Yeah, going into let's see. Yeah, it's going to be end of next week sometime. And then but for practical reasons, by the time I get used to it and test it and so forth, think about it just as a preliminary alpha. Preliminary alpha article. We're looking at early part of April. So, and somewhere in April, hopefully we can get into a chat room where we start beta testing. If things will go well, then we'll roll it out. But for now, 491 is we're very happy with. Nobody's complaining, so it's been doing good. And also, so is our system houses. The main thing we did really was to handle system houses because they're trading very big size in one account. They gang them. They gang orders. So we're looking at anything between 80 to 150 contracts at a time. And so, hi Dennis, how are you? So it's becomes a tricky ball game. It's very different than trading 3 MNQs or 3 NQs. It's a different setup. What we're building in is to check the account, make sure that the count is correct before we even go to the next bar. So we can adjust. As you know, liquidity in NQ and MNQ is an issue. MNQ is coming along really well. NQ is still lagging, but NQ is a more efficient tool because of the leverage. It's 10 to 1, and now actually, if you look at, I don't know if you guys are aware of this or not, on TradeStation, I think they're listening to other people, other competitors, and they have dropped their margins. Now, that didn't apply today. By 1 p.m., they, if you call them, they'll tell you. I've suggested to them somewhere up here, post their changes on the assets they have, because sometimes they're 1 day only. For this day, we're doing that. We're going to do 50%. We're going to 100%. Today, after 1 was 100%. So the 3 MNQs would have been, would have been 1680 times 3, so $5 grand. Okay, while during the daytime usually it would be 462. Now, if you see that, see they dropped the margins on NQ to 10% in for day trade, and for the micros is 25. Okay, so still is more efficient and a lot cheaper commission wise. So just be aware of it. This is what TradeStation is. All websites, all the platforms have it. Their margin requirements. The problem I have is that these guys make some exceptions down here. Okay, nobody's time to read that. We understand all of that, but if there's a day change only, I think it should be up here somewhere in red, and they're trying to incorporate that in. Okay, trying to just add some value. I've had pretty good rapport with them anyway over the years. All right, so 5.0, another 10 days behind. Sorry, but there's no coding issue. We haven't even touched it. It's in a pretty much limbo. We finished the entry tests. We were in the middle of an exit test where this happens, and I said, fine. I mean, looking at what we did and the log files we added to really decipher what TradeStation API, what's called TradeStation Trade Manager was not telling us, has been a great move. I mean, our log files were so huge, you see every single little tiny bit, every step through the code, values, number of contracts, money in the account, everything's there. Boom, boom, boom. By the way, your data, when you run it on your machine, only you see the log file. When there's a problem, we have to ask you to give it to us. We don't get the data out of your account, see what it is. Nor can we have time to understand it or decipher. There's no value with us. But if there's a problem, yeah, you have to send us the log files, and that tells us exactly what happened. A lot better than, plus the chart and log files. A lot better than what Trade Manager was giving us. Again, we don't know what TradeStation is up to, but I think they feel they're in a coasting mode. They're happy with the version 10 update, like 68, fairly stable. They all tell us just don't do 9.5, and there's no talk of 11. Internally, I hear a little bit differently, but I can't get into that here. I do have a fairly decent non-disclosure, but it's been there for years, nothing new. All right, let's go to next part of a puzzle, economic calendar. Okay, we had our FOMC meeting, and again, it turned out to be exactly what I said. I shouldn't be trading it. I had a bad day. I had a good day until early in the morning, but then there was a couple of interruptions, and then I lost a little bit constantly. Boom, boom, boom. I went away during lunchtime. I'm sorry, a little bit after lunch, I went away. I told the chat room, I won't be here doing the soapbox, the Uncle Jerry's presser, because each question they ask him is it really turns into a trade, and you don't know which way it's going to turn. So you're constantly in and out, and sometimes for small amount of win or small amount of loss, or most likely a bigger amount of loss. So I said I'm going to sit that out, and then I traded from like 3:30 to about 4:30. So, matter of fact, as I opened this, I had a little position on, but didn't rally. I was long, hit my targets. I'm out. Made a few bucks over there. I'll bring it back tomorrow. That's not an issue. But it was bigger than I expected. I should have heeded my own advice. Don't touch an FOMC. So, next time I go on vacation, so I won't even be here. Yeah, right. Yeah, right. Gary, you better turn off your phone, okay? Because otherwise I'll have a B2 circling above you somewhere, especially with Apple. Here's what this rascal is telling me. Now, I know Gary has been coming to our meetings for like 5, 6, 7 years now. He says, I asked ChatGPT how to make money in this market. He replied, ask Barry. Right, sure. Well, not today. Shouldn't ask me that question today. Tell ChatGPT to come tomorrow. Yeah. I had a great day yesterday, last 2 days. Great days. Today, I fault. And by the way, they put me on reduced margins. Because 2 weeks ago, I had 2 margin calls in the same day. And usually that doesn't happen with me. And they said, you did not. I said, do I have a margin call? My numbers are correct. They said, no, but you didn't put the stops in. I said, I had some. They said, not full stops. And they were right. So I got busted not using full stop. Like, you have 10 contracts long. I was 8 stops up. You know what? That 2, why did they catch me on that? Or how they caught me? I'm in the midst of multiple accounts on a dome. Things are moving up and down. So, yeah, in 2 or 3 cases, I forgot to have exact matching count. So they busted me on that. They said that you're gonna be at 25% for 3 weeks. 1 week is already passed on, so I've got 2 more weeks. That's fine. I don't mind argue. Actually, less leverage is not bad, except when it's super directional. As you know, if the market gets super directional, that's how you make money. With pushing the leverage and then hold on to the burst. Don't get in and get out. Let it run. Then take a partial out. Let it run a little bit higher. Buy a little bit. Half of what you want. Half of what you were in before. So you're not expanding your base because on a snapback you can give it back. Rather, you're going 50% down and then go to 75. Take 50% of that. Then you know what I'm saying? You keep on shrinking it as it goes up, but you stay in. You're net, you're along the whole room. As long as it's really moving. I mean, there were like 15 minutes, almost 20 minutes, a directional move here, post FOMC. We'll get into the chart, I'll show you. So I missed that. Anyhow, tomorrow we got, I don't know what the hell this is, Chicago Fed National Activity. We're getting as many indices these days reported on all these different econ calendar system, as if we have ETFs now. It's like a ETF for the news. But the main one tomorrow is going to be new home sales. How do I know it's important? I have a lot of friends who are traders down here from Chicago. And what the wives do? Well, they did. Last couple of years, they made more money than the trader husband. Yeah. Now, they're just spending it. Or they're just bored. The market is slow. 670 prior. This is annual rate, by the way. 670,000. They think it's going to be 645. But range is tight, 630 to 660. We'll see. That is at 10 a.m. tomorrow. Nothing else there is important, in my opinion. Of course, you got to take a look at balance sheet. But I've got Anita here. She'll run it for us. Hi, Bill. How are you? So that's for that. Okay. What else do we have? Durable goods? Absolutely. That's 8:30. Oh, Bullard is speaking. Now that we are past the quiet period. Yeah, we just finished it. Yeah. I'm surprised nobody's jumping in tomorrow to say something. Bullard will speak at 9:30. Is the head of San Luis Fed. Pure political animal. Yeah. 9:45. Composite flash. Let's see. Look at durable goods. 4.5 prior, consensus of 1.5. So they think we're coming back a little bit more active. Negative 1.5 to 2.8. That's a big range there. The seller. 0.7. This is doing in reverse. Transportation, they're expecting less. Okay. And range of -1. Wow. And core capital goods month to 1.8. This I need to see. This is a lot more meaningful for durable goods, yeah. At least in my humble opinion. Okay, so this is week 3. No, I'm sorry, week 4. We had week 3. Week 3 was expiration last Friday. But we got 2 more weeks to go. It's 31 days, right? So this is week 4. I'm going to have a full week of week 5. Okay. I forgot what else goes there. GDP has to be there. That must be next week. Okay. All right. What else do we have? Now, one more caveat. Take a look what kind of a day we have tomorrow early on. What do I mean by that? There's a whole correlation between FOMC and non-farm with the following day, the following trading day. In many, many ways, the following day is the key, is the signal. One is the reaction to the news. The other one is where the big boys think we're heading. So I will be watching a little bit tonight. I will not trade at night, but I'll watch it a little bit, and then I'll watch it probably early in the morning to get any clues. But I expect tomorrow, not because I'm long, I was going to do that, but I expect tomorrow to be a bit of retracement of this, at least somewhat. Now, we closed 62 handles now. Oh, geez. Wow. Hold on. Let me go here. We did 65. Yeah, horrible. Outside bar. Yeah. So yesterday and the day before, just as we talked about last week, headed up, went to 50. Bar did not get past that. I'm looking at 4,100 as area to get out for my long. Still not there, but this was a big day. Usually tomorrow, when you have a big day, it's outside bar. We should have an inside bar, and let's see how far do we go up. That's key. How high do we get tomorrow? So that's what I would look for. With that said, why don't we move on to the charts? Okay, 1 second. I'll get one live. Okay, timer charts. So I get dehydrated very fast. Okay, now we're in an interesting spot. We came down to 200 bar, and we're on a golden cross, right? We're heading up. Okay, here's where golden cross is, right? 50 bar jumps over 200. Everybody gets ready to go. They trash it. Comes back up, goes through 50, can't get through. It does go through early today and then reverses, and we stop at 200 today. McLaren Oscillator is 102.5, so negative 103 effectively. I believe these are fresh, just to be on the safe side. Yes, because I opened them after 410 or so, 4 or 5, after 4 or 5 or so. These will refresh to be true numbers that will hold overnight. Also, breadth trust also at negative under 40. It's 38 now. This was a launch pad mode, but no follow through. Why? We're still in a tough regime. We're still in a 5% market. Okay. Even if Gary goes to ChatGPT and asks, what's the best rate I can get you? It's everywhere. Look at the news. Yeah. So if you're in a safety of treasury markets, I mean, a lot of platforms are offering you can have your own treasury account on your phone, so you can just buy directly from the Fed. I think there's a minimum, but I think 10,000 is the minimum. But that's the case. People are not going to easily get out of that and come to a risk environment of the FANG and the S&P, the industrials, and what do you call it? I forgot the name. Cyclicals. So that's will be a problem there. We're pulling back here a tad. We're doing good on CIDF. We pulled back, as you can see here. The problem is also we're at zero. This is one of the worst times for this to drop. So we'll see. Next 2 or 3 days could be touch and go. Let's see what doable goods do tomorrow. Downside volume came up today. We're over 5. It's 66677 on NYC and about 4 on NASDAQ. Okay, this is all of NASDAQ, by the way. We look at advanced decline. That's an input into a McLaren Oscillator. That's a partial input into breadth thrust. But we use raw all of NASDAQ, not just the big caps. Why? We look for a divergence between the big cap setup versus all the mom and pops in their bond funds and so forth. There's some noise there, but we want to see if they're together or they're diverging. Okay. Same thing is always done. We do not change these. If you start changing these things, looking for a better solution, you'll never find it. There are some better solutions, but the chase for that is too tough, and also you're reorienting your mind again. You lose the cumulative learning. Okay, come up with a few indicators you want to use, stick to them. For a couple of charts, that makes sense to you. Okay, the transportation is pushing down. Oh boy, that's another 530 points. Yeah, again, I think what do you call it? This past year, it's been a year, I think, since Uncle Jerry started to raise rates, right? I think from Feb to now, yeah, maybe 13 months. I don't think he's had one up day in the FOMC. The other 9, because it would be 8 in a year, plus we have these 2 months, so 10. Yeah, the 9 out of 10 have been to the downside, including today. Now, these CIs and CI dips are on the second part here, what's called data series. That's transition we'll call them. If you do it like this, you'll see. I mean, the symbols, you got 2 feeds. Data 1, data 2. It's based on this and also Russell here. Why? We want to know because these are leading indicators. The index itself. Okay, in aggregate. Okay, not one day, not one name like a FTX out of transportation. No, or Norfolk Southern. No, it's in aggregate. And right now, the aggregate says I'm seeing a 200-day. I don't know what I'm doing. Look at up and down. So there's no clear signal, except that maybe we're slightly down, and we're negative 13. If it gets oversold more, then we have a chance for a bounce. Otherwise, it could be a drip. As you guys know, my comment earlier was you should pause. It didn't. But, he doesn't listen to me. Even though we went to the same school. Actually, he was 2 years ahead of me. And this is pure interest rate issue. Yeah, because smart caps are a lot more interest rate sensitive. Okay. They had a question for him I heard that in the car, that about, do we have any SVPs out there? Do you think we've taken care of everything? And why did the regulators fail here? He says, well, his answer was interesting. He says, regulators didn't fail. They were there at work, but they missed it. That's all semantics. Okay. They sure missed it. They didn't understand the duration risk. So, oh well. So don't ask me to explain that. That'll take half a day. Duration in bond futures and bond portfolio, it's one hell of a subject all by itself. Yeah, the book's written about it. So, all right, what were we doing on defenders? Negative again. Negative, not yet. Okay, so that's NDX. Okay, almost negative. Each negative, positive. Okay, so it's 6 out of 8. And this usually is the beginning of a push to the upside. And so this consolidation has to finish here. Same here. And see what the breakout is. We were breaking out here in both cases out of that consolidation, but we have failed. Okay. Even though he had a high, he had a pretty decent high today. 493. I don't think we have traded 493. You know what was this high? 12,880. This was, I'm saying 943. 943. So we traded 60 handles above that, of this, the big swing high. Okay. This is a swing high, this is a swing low. So double top, that's a possibility. So this tells me though, we should be pulling up. It could be now, this could be a week from now before we pull up. Why? What's the catalyst? We don't know. Nobody knows. So just keep an eye on it. The system went to a buy yesterday. I mean, this is just a simple modified Hornet. It's all by itself. There's nothing fancy. It doesn't do any major stuff. It's just really doing turtles. It's doing Richard Dennis stuff, which is trend following. Okay, so we are long here on the weekly, and just went long on a daily. Now, there's a school of thought that says the daily signals here could be inverted. That is, you really should be selling there when it goes to a buy. If you believe in mean reversion, then that's absolutely correct. The problem is that that whole concept is 50-50 in terms of whether this buy should have been sold and that sold should have been bought. As you can see, it did work. So sometimes it does, sometimes it doesn't. Currently, it's buy. I prefer to look at the weekly for trend following more than anything else. And we're still in a buy, pretty much at the same level that we tested today, or we tested yesterday. So I'm sorry, tested last week. I'm sorry, these are weekly. The low of last week. So we're in that area. What do? Just be very frugal. Keep your bet size small. Don't get into high risk stuff. This is not a time to be a hero. Vols, just amazing, amazing. Look at signal levels. Remember, according to, I've said this many times ad nauseum, VIX should be viewed against itself. Well, not just this VIX, all volatility assets, basically. Per the guy who wrote the big book from Wiley, Derivatives, $250. That was 10 years ago. $250 for a book. Yeah, probably the most expensive book they have published. The guy who invented VIX. Let's see, Bill. I forget his name. Well, no, Robert Whaley. Yeah, Bob Whaley. Yeah. So, anyway, we went to 3 and 4 sigma. We created congestion there. We talked about this. I think last week we talked about it also in the chat room a couple of times that hold on a second. You got to measure it that way. And this, I'm saying, when you see that congestion, usually it's going to work out. That means it's going to start failing. And if this works out, what happens to equities? Equities go up. So far on the right script, except until today. So, but let's see what the reaction is, really true reaction tomorrow. Whether is it digested and dissected zillion times over on the financial publications with a lot brighter people than me. And we'll see how they'll lead the major players into what to do the next couple of days. SQ, yeah. Yeah, SQ says the big boys think we're heading up. That's what this says. Here was fear. Here was coming to say the tail risk is too high. He just pulled back. Pulled back big. So now, is it today's in? Let's see. Remember, a couple of these indices report at 1 hour after the close. It should be. Yeah, that's today's. Okay, yeah, 323. So it pulled in quite a bit to 123. Yes, that's it. Yeah, or 4% lower. We're back below 0 sig, and we're in the first quartile of the empirically observed values since inception, which goes back to I think 2009ish, 2010. I forget. But yeah, I know I was in Chicago. Okay, treasuries. So I'm gonna say, let me recap here. So the big boys are basically, this is measuring the big boys' activity for tail risk. That means all the money puts here of SPX. Okay, this is based on SPX. This has nothing to do with SPY. SPY is a soup. No, this is expensive and big players hang around here. I'm still of the school that we may visit 3,600, but not on this leg. Not on this leg. I don't think the Fed can afford it, and they'll job on it any way they can, including the whole array of their army of FRB presidents and the Treasury and the White House and all that. We're not in a good spot here. Okay, so they'll jawbone it any way they can, and you saw what they said the Fed can't do last week. So, to avoid anything down below, but listen, I think this area is reserved for debt ceiling problems because we've got a situation where people don't even understand what they're talking about, and that's what creates uncertainty. We can get it in this area. Okay, debt ceiling is like this: you go and get a Maserati out of a dealership, you sign a 3-year lease, and then in year 1 and 2 months in, you say, I don't want to pay it anymore. Wait a second. You got the car, you've been using it. Yeah, it's time to pay. It's not an argument. It's not what you think. It's black and white. It's in writing. It's a contract. So that's what the problem is. So anyhow, I don't want to get into it. Could turn to politics. I'm not into that. All I know is that I know where to look for warning signs. I think that's where that problem is going to be, and it's going to come and hit us when we're least expecting it. By the way, right now we're very alert, so it won't come now. That's why it came back down. Yeah, it'll come when it's always going to be a factor of surprise attack, and just like in war, and there's no surprise attack now. It'll be later, where index is higher. At least that's my personal opinion. The rates dropped dramatically today. Am I right? Yeah. Wait a second. Is this current? Yeah. So basically, that tells me that they weren't so impressed by these answers. They probably think there's something else wrong there out there. Why would the rates come down this much? Okay. And so, I think the bond vigilantes see further erosion in the economy. I think that's what I'm reading here, with the rates going up a quarter point and then dropping like this. So I don't know. I'll be extra careful. I'd like to see a normalized rate environment where we could be at 1-2 points above inflation, but not right now. Obviously, we're way above it right now. We're not even there yet, in my opinion. We're getting close, but we're not there. We want to get 1 or 2%. Why? That'll bring back the covenant with the net savers. You'll have also a balancing portfolios with bonds. Right now, we were all in or nothing. You're all in for a risk or nothing. That's not a way to go. We've got to get back to quote unquote normal environment. Hold on one second. That's my tea. Sorry. Actually, excuse me. That's tea for Admiral Tico. As you know, he loves Rumi. Reading Rumi and having a sip on Persian tea. So I got to take care of the big boy. Yeah. The whole 9.5 pounds of it. Okay. So that's for the rates. Probably this is the most watched. I mean, listen, if this thing ends up, goes flatline around 3%, I'll be happy. Okay? And it stays there, but obviously we have a lot of issues. TD, okay. Wow. Let's just see the last hour what happened with the S&P. Yeah, it was dramatic. We've gone to negative 2.94 now. This is a correct spread. Always check your spread, which is we're long, oh, huh? Okay. I thought I fixed this. All right, hold on. Murray, that's the wrong one. So my bad. Hold on. This has to be, I just changed this, huh? Okay. Sorry, guys. We changed that last Friday. That's a J, so that becomes April. And this has to be July, which becomes N. Oh, jeez. VXN23. Okay, yeah. Long April, short July. 91 day. Okay. Yeah, that's more like it. Yeah, that's more like it. You know why? The one leg is stopped trading. The H is not trading, so the number was off. Yeah. And you could say, what was the difference? Well, it's not trading. But it's not trading, you're in trouble. Yeah. Actually, you could see this morning it settled. You see that? It settled at 9 this morning. So then half an hour before market open. So this goes away. Hold on. Take it out of there. Yeah. Okay, now we're good. And I'm going to put, I think it's Q, isn't it? Yeah, that's the August. And then VXU23 is, yeah, I like to actually see it like this in terms of structure of volatility. Okay, that's a SEP. Okay, let's save that. Always learn to save your stuff immediately so you don't get in trouble. That's M23. Okay, so you could see what happened. We dropped dramatically. It ratchets up. It's still not zero yet. Okay, so we may have a little more drop here. Okay, we may have a little bit more drop forward. It could be anything. Could be tomorrow. Could be Friday. We'll see. Yeah. Okay. SP2. SP2 is neutral. No signal. Our stock RSI, that's available on our, I think, Pro package. Happy Pro. Did his rendezvous finally. Didn't do it here. Did it here and pulled up. Like clockwork. And we said what? Look for rendezvous. So now this heading to make another rendezvous up here. But by the time all three of them get together in that range of 80 to 90, that could be number of events before we get there. So hard to predict. Right now, SP2 says I'm neutral. I'm near 50. Let me refresh this, make sure we're good. Yep. Okay. Up and down volume. Yeah. This just cratered. This just cratered on the downside. So the moment he was done talking, they just trashed it big time. Yeah. Of course, NDX was much bigger. You could see. Also, you could see also what we did on the Sigma levels on 30 minutes. This 30 minutes is the most widely watched static chart of indices for the future traders in Chicago. This is what they have. One of the monitors showing this always. So you can see the vol we were in and how it gave up all of that so quick. Okay. But we didn't trigger anything. Again, there we go again. Russell did, but only Russell. I need to post this. Actually, Admiral Tico does. I'll do it. I'm behind today. So, okay. By the way, thank you all for joining Tico's feed, Admiral Tico on Twitter. He's had a new rush of people coming in. Must be his charts. Okay, what are we doing here? System is short. System is still short. Interesting. Wow. This is mid cap. S&P mid cap. These are futures. Russell. Yeah, they're on live. It doesn't stop. Work at night too. Again, congestion here, but we're still short. So short. Right. Yeah. And here we're long. Interesting. On NQ. All right. Now, Peter Cook created this because he knows how to find these. This is a tough item. Tracian has the indices there. But he doesn't trade the short side. He's more of a long person. Not a bad idea. I've thought about that also, possibly incorporating in my own trading. But that's not a bad idea to step back in the area you're not comfortable with. There's no way you could be good at both. There's always an edge. You want to be good on shorts. I'm a good friend who's very good on shorts, but not so on longs, and vice versa. Usually the pro guys are good at shorts. The more you're out there, because they've been selling vol, that's their thinking. Yeah. So, is there anything else here? Chart of the week to watch. Look at this. FRC, just incredible, absolutely incredible. And there's another 14% today. It reminds me of Citi. Whatever money they put into it would evaporate. I don't know if you guys remember, talk about January. Oh, at BOA too. Citigroup and BOA, January of 2009. Okay, the worst is over, at least in disclosure and so on. TARP is working, all that stuff, except these two stubbornly wrong banks. One of them was part of a shotgun marriage between Ken Lewis and who was it? Thade? I forget. The guy who ran Merrill, and then he ended up working CTI, I think. Commercial. That marriage was so rushed. Got no idea how much back paper they had. Whatever put money, Hank Paulson would put in early January, we will be gone within 2 weeks. Not gone, but in the sense that, oh, that's not enough. You give us a 50 billion, wait, another 75. What? 125 comes in, we're showing another 60. We went into a tune of 200 billion before they stabilized, and the company never came back, really. Citi, B of A, they've never come back. Here's BAC. Okay. Never come back. Look at the years. Yeah. This is 2009. I remember CMAC used to trade this. Just recently they pulled up, but never got where they were before. So, but look at the opportunity cost. It's not worth it. Same thing as cities. Yeah, look at this. Yeah, city's gone. City's history. Yeah. So, anyhow, one more chart. Oh, come fly with me. There we go. By the way, they're back in Pensacola. They were in California. They just got back. I keep track of where Blue Angels are. Okay. Okay. Again, you can do this on the stock RSI, the stock charts. This is the symbol alpha. Dollar sign. That's Sierra Papa X-ray Alpha 200 Romeo. Okay. And I suggest you go here and look at it two ways, 2 and 5, and use 20 and 50 as your inputs. Okay, these guys you can change. And it changes your. It actually this has its own page inside. This is, I forgot what they call it. It's an insert. I forgot. But that has its own URL. They save that. So if you save it, you can always recreate it. That's why I've transferred over the years to different computers. Yeah. Same color, same motif, everything. Anyhow, we went even lower, guys. We talked about it last week. So where 55 to 45 is a sacred area. To be above long, below short. We're hanging down here. We're at 43.20. We were doing good, but let us have it today. Hold on. So let me switch back to 1 year so we can get a little bit detailed focus. You see what happened there. We're beginning to build it. We're beginning to create another congestion and then usually rally up after that. And I'm going to do this later. And it's not going to happen. Okay, that's my spiel. In aggregate, what do we do? What's the bottom line? Bottom line right now is now not very clear. Yeah, this was a confusing FOMC, and basically the big boys said you should have paused. You didn't do that. We're gonna slap you big time, and they did. I'm not trying to tell you because that's what I said a week ago. No, or early this week we talked about it again in the room. Actually, this morning I think Nancy brought it up. But jury's still out. Wait one more day. See how things are tomorrow. A lot of times you get partial or full retracement or reversal. I'm not sure that's the case here, but obviously it was a very, very tense Fed meeting and questions and so forth. Once it was done, the big boys had it, and they had to teach him a lesson. The true owners of this country are the hedge funds. Don't forget. The firepower they have, nobody has. So, which is, by the way, a lot of us, because some of our monies are in hedge funds indirectly through different managers. So, it's a very interwoven, interconnected world. But the hedge funds, by having that concentration, they can teach a lot of people a lot of lessons here quickly. This was a huge drop. So here's what I want to show you here. You get a better perspective. You can see what happened here. So, sorry. You could see what that drop looked like. Yeah. And let's see, is this the number? No, 330. Here comes the communique. Yes, that was the first part that did that. 4 bars, and then, when was this? He had not finished yet. He finished, I believe, here. Is it? No. He finished somewhere in here, yeah. Well, toward the end of his talk, they just trashed it. It came back for another air. They didn't do it. Could not get past 1 sigma. They trashed it. I would prefer even actually to present to you this way at 30 minutes. You could see what happened. Just a massacre. So this is tonight. This is now. Is it 6 o'clock yet? No. Oh, this is since the close. Yeah, since the close. Now, if you look at it here, you can see the range. We hit 40, almost 40, 40. 40, 40. That's a lot of work to be done. Remember, we earn slowly, we lose fast. With that said, I'm open for any questions. This is being recorded, as always, will be posted uh, in our web page, our website, I'm sorry. Go there, first link, our videos. And we're getting a lot of new hits. We appreciate that. Yeah, it just keeps rising, doing good. I haven't even sent an email out on this yet. But you could see folks are coming in, and we're at 1,600 now. Good. Okay. Any questions for me? Oh, I'm sorry. Are you on email? My email is on, but I haven't gotten to some because I didn't feel well. But usually my staff does. Nancy, Cash, Peter, they look at it. Is there something special you want? Let me know. I'll get in touch. Yeah. So, let me see, Dennis. I think today was rollover related as well. So prior contract? No, not today. Rollover was last week. Expiration was Friday. Yeah, I don't think it was this week, Dennis. It was last week. I usually my staff, Peter, gets to my emails, but if there's something I need to do, I'll be more happy to do. Yeah, or you can send me or resend it to me, so it'll be top of my list. I'll get to it tonight. Okay. I did get email from you, snail mail. Okay. High of the June contract. Oh, I don't know what that means. Dennis, hold on. What do you mean? I mean, we just started it, right? Hold on. Let me go here. On the SM now. I mean, this is if you look at this, hold on. 17 was expiration. Hold on. Let me do this. You could see we just came in alive on the 13th, which was Monday, right? This was a Friday. Rollover is now happening over the weekend and the start of Friday. So we've had reasonably good values. We have been coming up, but to me, that's not much of a contract. The contract just started, if that's what you mean. I'm kind of missing here, Dennis. You're way ahead of me then. To me, I remember there's a cost of carry and all that. This is a constant value. In terms of using ad contract or not. And I usually don't use that for any measurement because of now the rates are higher too. So the offsets are bigger. So what do I do? This is the actual contract high. But we just got there. My point is that why would it be a significant? We just got there. You know what I'm saying? I mean, if you look at here, this is 13,000, right? We're not here at all. So I'm missing something there, Dennis. Maybe we can chat and you can explain it for me, but I'm not getting it. And this is an actual contract. It's not a continuous. But the continuous, I have a lot of problem with psychologically. You know why? Because those are just, for me, those are geometry students. A big chart, and we did this. But it was 10 years ago. Things were so different. Rates were different. News was different. Sure. Yeah, please do. Thanks, Dennis. You know me, I love to learn. So, okay. Is it 30 minutes? Okay. Why do we have, hold on. Okay. Let me shut this down if we're done. And then I'll get this posted. Thanks, Dennis. I appreciate it. Peter, use the admin at Hamzy Analytics. Okay, Peter? Because the other people will get to it quickly too. If I miss it, admin at Hamzy Analytics. Okay, please. Which is also on our website. Hold on, let me check that. It's on our Twitter, on website, everything. If you go there, you hit this, but It says contact us. That's admin at Hamzy Analytics. Okay, it goes there. If you go to Twitter, it also posts. That's our email. Admin at Hamzy Analytics. Hamzy.com. Oh, there we go. Admin at Hamzy Analytics. We always have our email and phone number there. So you can hit us there. Then more than one person gets it. If you just send it to me, if I forget to see it or have a problem or get sidetracked, I have a lot of stuff going. I'm already doing too much. So it may be a while before I get to it. And that's my apologies. Okay. But my staff are always good there to sit in for me and take care of you. Whatever it might be. If they can't solve it, they'll track me down and find out what needs to be done. All right, let me close this if we're done with questions. And then I'll get the post-processing complete here. Thank you all. See you next week. Again, 4:30. I'll make sure I change it on the system. Okay? So it's 4:30. Thank you.